And we're off. Welcome, everybody. I'm David Grossman. We have with us today, we have Bob Aaron and Barry Lebo. Bob Aaron is a lawyer. A lot of you people would know him. He's written many hundreds of articles for the Toronto Star. Very knowledgeable and experienced. A real estate lawyer. His office also does wills and estates and business and corporate law. We also have Barry Lebo. Barry is a realtor with 53 years experience, not more than that, but 53 years experience. And he's an educator. He's authority on a number of things. He created the senior accredited designation course, accredited senior agent course, and he's taught thousands of realtors. I also took that course myself. It was great. He does regular webinars educating. He's also has sat on many hearings as a expert witnesses on matters of stigma and agency, and I'm very privileged to have these two guys here. And it's a very important topic. The market has been on fire, as we all know. People are buying. Whether they're going to be able to close and get financing is another story, but they get drawn into these, bidding wars or whatever. Everybody wants a piece of real estate, at least one piece, if not more. And what if they don't close? And what if the seller decides, oh, I could have sold it for more, and maybe they don't want to close? So there could be a number of reasons, but that's the topic of today's sessions. What happens if you don't close on your purchase or sale? Let's start out with Bob. Bob, what do you see as some of the major reasons that this kind of thing might happen?
Well, there's several reasons. There's buyer's remorse and there's seller's remorse. And sometimes the buyers overpay, they get caught in a bidding war, and then they can't finance as much as they expected to because the mortgage company appraises it at, well, this is your area, David, the mortgage company appraises it for less than they paid, or that maybe they felt they overpaid and they want out, or maybe they just decide they don't want it, or maybe they can't sell their existing house. Every time the government puts its ugly hands in the housing market, there's a humongous fallout where people, there's blood in the streets. And Barry's seen this, I've seen this. It's unfortunate, but unable to obtain financing, the house is too small, there's a work order on file, the tenants aren't moving out. There's defects, leaky basement turns out. A lot of people are buying now without home inspections, and that often turns into a problem later when they realize that there's a defect in the house.
Right, so that could happen after the fact. You might close, and if you didn't get a proper inspection, who knows what you're going to find?
Well, sometimes they find out beforehand, particularly if there's an open permit.
Okay, right. Barry, what's your take on this? Are we going to see a lot of people not closing, and what do you think are the major reasons?
You know, David, I do. I brag about the fact I've testified in court to over 600 trials, mostly in Ontario, but I've also testified in the United States via electronically in the United States over the years. And a large percentage of my work, stigma was the thrust of it for many years. But over the years, it started with urea formaldehyde back in '80. And the first agent got sued because they should have known there was urea formaldehyde in the house. And I started falling into doing agency work. In a good year, in an average year, I'm a busy realtor. I mean, I would do 12, 14 maybe files a year against real estate agents. Last year, I did 26 deals, 26 files where agents were sued. It is now the first quarter of this year. I'm up to 16 already, and I'm inundated. And I'm actually telling lawyers I can't start any more work till June. I just got to take a break because I'm still selling real estate. Now, a large amount of people aren't closing. Bob, I go along with everything he said, but I see things from 2 points: from the real estate point of view as a realtor, and as a pragmatic point of view of how a lot of the deals could have been salvaged and they could have closed, because in the long run, let's look at it. I'm going to defer back to Bob in a second. He's not the only lawyer on this call. You sign a contract. I don't care if the basement's leaking after. I don't care if you've got remorse. I don't care what happens. The courts are going to hold. You are obligated to come up with either close that deal, or if they have to resell at less money and all their costs, that you're going to get nailed for it. Now let's just look at this. A simple deal. The buyer can't sell their house, and they've put in a unconditional offer on another house. So they've got a house to sell, and the agent is going to be sued because they can't go ahead. Here's why the agent's going to be sued. The agent gave bad advice and told them, well, I can get you $1.6 million for your house, because they wanted the listing and the agent knew they were going to sell them another house. Well, what happens is the house wasn't worth $1.6 million. The agent gave them an inflated view. They get a proper appraisal, find out the house was only $1.4 million. So the agent gave them bad advice. The agent didn't do enough marketing. Maybe the agent wasn't even a strong agent. And what happens is the deal doesn't close. Everybody gets sued. Now, and again, I'm going to defer in 2 seconds back to Bob. The people own a home. The house is in the both names. The offer went in, let's say, on the wife's name or the husband's name on the second property, the house they're trying to buy and didn't close on. You can't just turn around and change title and say, well, so I'm Barry Lebo and I buy a house as Barry Lebo. I can't turn around and put, let's say, my daughter or something on and take my name off title on my existing house. I'm going to get nailed. My house now becomes collateral for a lawsuit. I got a target. You can go out and sue me on my assets. And one of the assets that I have is my existing home. And I don't care who you are. If you don't close, you're looking at a minimum. Bob, you will correct me here. The smallest deal, you can see $100,000 like that in a blink disappear in a lawsuit. And if I say to you I'm sitting right now with one on my desk. They didn't close. The builder, it's a new home. They're $878,000 that they're being sued for, because the builder had to sell it for less money. And in turn, I checked, there was a legitimate price with the people had overpaid. That's their stupidity. But when it went to resell, the builder sold it at market value. And there's 878, and the clock is still ticking because the costs are going up. It'll be $1 million they're going to be on the hook for on a house deal. And you know what? It could have been resolved.
So Barry, how do you mitigate?
I'll come back to how I stopped the deal from dying. I did a deal recently where they would have lost $120,000 by not closing. I made them close. I cost them less than $10,000. Bob, I defer to you about costs and stuff.
David, you had a question.
Well, that's okay, Bob. You go ahead and give us your take on this matter, if you would.
Back in 2017, when the government introduced the non-resident tax of 15%, it had a chilling effect on the market, and there was a crash. And it affected a lot of values, and people got caught between their buying and selling. So they overpaid for the sale, and when the market dropped, and then they couldn't get what they expected on their own sale. And I had one client cough up $350,000 in cash to the builders to get out of a deal, and it was really ugly. We have people who, I had another case where there were CRA liens. Terry Wallman mentioned this in the chat. CRA liens on the property, and the people were underwater. what do you do? There was another one I had. We negotiated with CRA and the Ministry of Revenue of Ontario for a year before we could close the deals. So who's responsible? The buyer is going to get hit for at least the deposit. So the law is that the deposit is forfeited, and then the buyer is responsible for the seller's damages. I thought there's a lot of court cases have come out recently, and I saw one where it appeared that the buyers did not get sued because the sellers sold for a profit. So at least the deposit is forfeited. So there's what happens. We can negotiate, we can litigate, or we can buy out the contract. And I think Barry's right that it's better to negotiate and buy out the contract than litigate. But my litigation friends, lawyers, are busy like crazy this year.
So Bob, if let's say I'm a buyer and I find out that the conventional financing that I thought I could get has fallen through, either because the mortgage broker didn't do a proper job pre-qualifying me, there was some issue with the house itself, maybe the house didn't appraise, and now I can't get financing. Do I go to get private financing at any cost, or do I go to my lawyer or my real estate agent and say, look, I've got a problem here. What can we do about this?
So I tell my clients, when they're in potential breach of contract, I say to them, look, you signed a contract, you're responsible for it. Wishing is not going to make it go away. So what we need to do here, you have to realize that you're responsible, and you can pay now and negotiate maybe a haircut, or you can take it through court and litigate after 2 or 3 years, and it's going to be very, very messy. I'm a court-appointed lawyer on a case now. This is a matter of public record. The vendors 4, 5, 6 years ago refused to close because they thought the price was too low in Brampton at about $850,000. So they refused to close. The lawyers now have been to court probably 8 or 10 times, 2 or 3 times to the Court of Appeal. We still can't close. It's a nightmare. This is the case of Dat versus Beer, DHATT versus BEER, and it's published on CanLII, CANLII.org, and we're still trying to close. And the vendors who were in breach of contract by refusing to sign the deal, they're going to pretty well get wiped out by the court costs and by the judgments against them since the litigation has started. So it's best not to be stubborn and just realize, talk with your lawyer, talk with your realtor, talk with your mortgage person, realize what the liabilities are, and hopefully work out a solution at the front end rather than 4 or 5 years later.
Or longer. I'm doing cases now, Bob. I've got 2 on my desk that go back to 2012. They've been going through, and 2 major law firms are involved. I'm working for them. Do you know what the fees are? It's ridiculous. They could have been avoided. You know, you got to look at money. Take the money that you're going to pay to the lawyers, and we don't have $1 and $2 bills anymore. Take it in 5s, 10s, and just take a big pile of money, throw kerosene on, throw a match, and that's equivalent to what you're pissing away by fighting one of these. Am I about right, Bob? I mean, I'm going to say something to the agents that are listening to me. Don't make this mistake. In my appraisal days, during the last boom, when we were still doing residential mortgage work, in the last boom in the 80s, we were being denied access. Sellers were going, we're not letting you in our house. They've had your 2 visits or the 3, you're not coming in. And we would get this constantly. Why? Because prices were going up. They were trying not to have the deal closed so they can resell the house for more money. When you put a clause in that you have 2 or 3 inspections before closing. Always put in that clause that an appraiser is not or does not constitute a visit, does not constitute a personal visit. And I go further. I put appraiser, I put brackets on S, appraisers. I slip it in. Why? Because I go to David Grossman. They have been turned down by the A banks, and I need to close the deal, and I have to go to a lender of last resort, David, because I'm a commission agent. I hide my income, whatever. David has to go and find me somebody. I may have 3 appraisals on the property before I get one lender that's ready to give me money, because not every lender uses the same appraiser. So make sure to cover your ass as a realtor that appraiser visits are not part of the 3 that you've got. That's one thing. The next thing is as a realtor, this bothers me. In commercial, we do this. In commercial, I've done it many times, but I've never done it as a residential realtor. In commercial, we put down, we get huge deposits, 200, 300, 400, $500,000, we get a $500,000 deposit sometimes. We put in that we get, as the realtor for procuring the offer, a piece of the deposit. In residential, we don't. I'm dying to put in a clause between me and the client that should this deal forfeit, I get my commission, because I've done my work.
David, there's been a couple of interesting questions on the chat.
What
Mario
you
asked,
seeing?
what
Go
happens
ahead.
if the buyer changes his or her mind and doesn't make the deposit? Which is a very interesting question.
Common.
And the answer to that is you make sure you give notice, you give registered mail or hand delivery or email and say, look, you are in breach of contract. We're going to give you another 24 hours. You don't make the deposit. You give them a notice that they're in default, and you put the place back on the market. And then they are responsible and they can be sued for the deposit. So for the agents out there, make sure your people, if they're buyers, make sure they have money, make sure they're not going to change their minds 12 hours later. We've all seen that. Terry asked, and this is a great question, what happens if the tenants fail to move out? And I've actually had this in my practice, had one yesterday. And my advice to the vendor is go to the bank, get a pile of $100 bills, have a meeting with the tenant, and when the pile of $100 bills on the tenant's kitchen table is high enough, the tenant will move out. Make sure that the tenants are going to move out before you sell the property, because that's a huge problem.
Thanks, Bob. Barry, want to ask you the same question I asked Bob earlier, and that is that if you buy and then you change your mind, either because you're having a difficult time getting a mortgage or whatever, what would you say? Would you say close at any cost, or would you say, try and talk to the people from the other side? Because who knows what's going on over there. I mean, you don't know if you're going to be, maybe they bought another place and they're counting on you to close. Otherwise, there could be huge penalties and costs. On the other hand, they might say, well, you know what, the market's actually gone up further, so maybe we can even put it back on the market and sell it for more. Is it worth having that conversation?
It's always worth having a conversation. And Bob's right. You're better to all times mediate and try to use the olive branch in every case. But the lawyers that I'm speaking to on a regular basis, and I speak to about 4, 5, 6 lawyers a week every week, they're all telling me that they're seeing more and more cases where people aren't closing, especially deposits. The next day, the people wake up and go, "What did we do last night?" and don't understand. They still, with or without a deposit, they still have a contract. Can I go over a structure of how I got a deal to go through that shouldn't have gone through?
Go ahead, Barry.
So the house is in Bathurst Manor in Toronto, which is, for those that don't know, that's Bathurst and Shepherd. It's an older home. It needed a lot of work. It doesn't matter. It sells for just under $1 million. I had had it on the market, and it was conditional. we had a condition in there for a little bit, and it was forfeited. The commission was waived. Pardon me, the condition was waived, and in turn we had a firm deal. The people bought it. They had a house to sell. All of a sudden, we get a thing. They need to extend the closing. I think Bob's the lawyer, as a matter of fact. I just realized you were the lawyer on this one. We need to extend the closing. What's the problem? They can't sell their house in Richmond Hill. Okay, you can't sell your house. Let me see what's your address. I look it up on MLS. Looks like a nice house. And things aren't good, and we're getting closer to closing, and they can't. So finally, I sat down. I said to the agent on the other side, "Do I have permission to speak to your client directly?" And the answer was yes. I said, "Here's what we're going to do." So I explained to the client in no uncertain terms that, number one, they're going to get sued. They're going to lose they had 50,000 deposit, 50 at that point. I said, "You're going to lose $50,000 right at the beginning. That goes. Next, you're going to start into a fight for years ahead. Your own home that you're trying to sell right now isn't going to be sold because it's an asset. It's going to be attacked, and your credit and everything else." I said, "Let's just say you're going to piss away fast $100,000 to $150,000. Are you ready for that?" "No, I can't do that. I can't afford it." "What if I could show you a better way?" I go back to the sellers, who were very difficult. I got the buyer to come up with another 20,000 deposit. Now I got 70 to show strength. We got the deal closed because the sellers took back a second mortgage. Okay, the guy had arranged a first. He had already arranged a first. We took back a second, relieved pressure from him financially. He closed the deal. Within 3 months, he had sold his house. The whole process, everything, lawyers' fees, everything included, was about, I think, $8,500 out of his pocket. That's what he lost, $8,500. Now, in turn, I took my sellers, who were two brothers, up to meet the buyer at his house. We went through to see, what do you got to sell? Like, what if the guy's asking $1.6 million for $1.2 million house? We went through the house. It was impeccable. We walked out going, why is this house not sold? And I had all the sales in the neighborhood. It just turned out at that point, there were an awful lot of competing listings. That's all. He was dead on in the ballpark. And sure enough, it relieved. So by using a second mortgage, a vendor take back, we were able to alleviate $100 and something thousand of a problem. Now, is this going to work in every case? The answer is no. It's mortgage manipulation that works when it's necessary to work it. Does that make sense?
Good points, Barry. There's a question that came in. It says, if you see or learn that you're, and I'm not sure if this is for Bob or for Barry, if you see or learn that your client is not able to close on a transaction, how can you best assign that deal to another? And one, protect the deposit, or is that forfeited? To ensure that should the next party not close, you are no longer on the hook. And three, if there's a buyer's representation agreement in place, is the first selling agent entitled to any remuneration from the first buyers despite assigning the contract? Barry, looks like you've got some thoughts.
Yeah, I'm thinking, Bob, your answer, buddy. Go for it.
Yeah, that's like a whole real estate course in
That's what I was thinking.
Okay, so can you assign it at a lower cost? I think that was one of the questions.
Yes.
Okay. It wasn't clear from that question, David. Are we talking about a buyer or a seller not closing?
I think if you learn that your client is, well, it just says client is not able to close. I would assume it's a buyer, but I'm not.
It's a buyer.
Yeah. So if the buyer can't close, Barry's idea about negotiating is a great idea. But I sit down with my clients and I say, look, here's how much it's going to cost you if it goes to court. let's open the lines of communication. A seller has to act in good faith. The seller has to mitigate damages. I talk to the agents, I talk to the other lawyer, and I say, look, we have it's not my client's problem, it's a mutual problem. And we got a problem solve here. So I go over the numbers with my client and I say, okay, if you don't close, here's what you're on the hook for. And if you do close, you're going to have to come up with money somewhere. You're going to have to borrow it. You're going to have to go to a second tier lender. Here's your choices. And here's what each choice is going to cost you. And you know, you take your pick. Failing that, here's the number of my favorite litigation lawyer. Somebody asked, can you assign at a lower cost? Absolutely. I've had a number of pre-construction deals where the clients come to me and they say, I need to get out of this and I want to assign at cost and I'll pay the commission. And that's a sale at a loss. And that's another possibility.
Yeah.
Assign, take a loss, pay the commission,
Yeah.
get out of the deal.
And hold on, and it's tax deductible if it's not principal residence, if it's an investment property.
Yeah, that's right. You can take, if you take a loss on an investment property, the government's in there for a share of your losses.
That's right. And you can carry it backwards and get money back from your last income tax.
Clients always love to hear that the government's in for a piece of the profit. The government's also in for a piece of the loss.
That's correct.
One of the questions was, what if the seller doesn't want to close? The buyer has a choice of suing for damages or suing for what's known as specific performance, forcing the seller to close. And if the property is unique because of its location, because of its design, because it's particularly suited to a multi-generation family, and the courts are getting fairly liberal in interpreting this, if the buyer can prove that the property is unique to the buyer and can't easily be replaced like a cookie cutter condo, then the buyer can get specific performance. So the seller is he kind of has a choice. Either guess if the buyer is going to claim specific performance because the place is unique. This all involves heavy negotiation on the front end.
By the way, unique is very interesting. I've done cases of that. I had a case where it was the only place in the city of Toronto that allowed for the smoking of meat. I had another one. It was the only zoning in the city of Toronto that allowed you to openly store raw rubber. It was the only place, and they couldn't close at first, and they were suing because the trouble is, how do you quantify it? Because it's the only one. What do you compare it to? But I've had unique cases, and I've had one in cottage country. The property was just so unbelievable that it was one of a kind, with a cove, with a beach. It had everything, and you couldn't duplicate it. And it was one of a kind, uniqueness. So yeah, unique is a good one.
Barry, I think your comment about putting in a clause that multiple visits for appraisals,
yes,
should be in a contract. This is something that, you know, people come to me because when I'm arranging mortgages, they, you know, of course, in many cases, an appraisal is required unless it's an insured mortgage. And, you know, you might also get an appraisal that you don't like and
that's
say,
correct.
hey, you know what, let's just order another appraisal, whether it's a different lender or not. And you're also right that sometimes we may need to change course, and it's possible that that we would need a different appraiser. So that's a very good point for people to put in there.
Remember something else, David. Going back to my appraisal days, we were experts too. We had two people on staff that were experts in insurance valuation. In other words, replacement cost. I was one of them. So I could, when we had unique houses in Rosedale with carved panels and stuff like that, I had to do for Chubb Insurance. I had to go in and do insurance valuations before they could close, so they can get insurance on the property. That's still an appraisal. It's not
Some,
just for mortgage.
Somebody asked about the effect of COVID on this sort of thing, and my feeling is that COVID is a non-issue, that inspections can be arranged. It should not be an issue. It should not be an excuse to get out of a deal. I know some people, and there have been court cases on this. Some people say, I don't want people to come in. I had one deal where, like, the extended family, the grandparents and the parents and the kids all came in, and the seller was livid. And so we had to negotiate very, very strict, very strict conditions for the second inspection. But COVID shouldn't be an issue to get out
Unless
of the
they
deal.
die from it, then there's a problem.
Yeah.
I see occasionally cases where appraisals are taking longer time because, first of all, the appraisers are all swamped right now, number one, and number two, getting access is a challenge. And they, sometimes some people are using COVID as an excuse. With one appraiser, we ordered an appraiser several weeks ago, and they've just been dogging it because they collected the money up front. Not to say that all appraisers are like this, and I'm certainly not going to mention any names. But they came back and said that, well, we can't, access is a problem. And then I checked with the lender, and the lender said, we don't need access. We'll be fine if you can provide pictures and floor plans and such. So there are ways around access in many cases when it's not possible. Lenders and appraisers have to be sensitive, and it's amazing that the lenders are as thoughtful as they are. Let's say from a perspective of trusting that whoever's providing pictures are legitimate and such, because we all know the way an interior of a property looks can dramatically impact. There's a question here which somebody looks like they have a specific case, so maybe we want to take a look at it from Karen. She says, my seller clients, it's an estate sale, could not provide clear title to close. Their lawyer knew, given notice by other lawyer, and did nothing. Buyer tendered funds on first closing. Now it's a mess. My seller's lawyer is not advancing the deal. He told my clients real estate has gone up and they could get $200,000 more. The buyer put a lien on the property, and no matter what I tell my clients, they cannot get their lawyer to take action or resolve. Next closing date will come and go Monday. I've tried to tell my client lawyer is going to cost them money. Lawyer already took his payment in advance.
I saw that, and the answer to that is, no matter how much the conveyancing lawyers and the real estate agents involved talk to a stubborn client, it's not going to work. So the answer at that point is go to the litigators. And I think when a stubborn party gets served with a statement of claim, and then they go to a lawyer who says, I need a $10,000 or $20,000 upfront retainer, and there is no limit to my legal fees on this case, sometimes people wake up and think, oh my God, I'm really deep into the doo-doo here, and I'm now going to have to negotiate. So when you have totally stubborn clients, the thing to do is get rid of them, send them to the litigators, and let the economics of the situation sort it all out.
David, I think I have a question that you need to answer. Please understand, for people, there are different, I think we got to talk, a lot of agents today defer. They don't know mortgages like they used to. So what happens is they give it to a mortgage broker, and I would say, okay, you look after the mortgage. I sell houses or I sell commercial, whatever. Explain to them. There's the strata. First strata is the chartered banks, which are the A lenders. Okay. Then you've got the B lender list, which are what we used to call all the trust companies and the credit unions and what have you. Then you've got the C list, if you want, and then you've got the lenders of last resort. And so there's different strata of lenders depending on your, I would even say your credit. It's what you can prove. And let's go to the very last one, the lender of last resort. Would you not agree that if the down payment is at least reasonable, there's always a lender? You may not like the terms, you may not like the fees, but there's always a lender. Am I correct, David?
Well, I would say that, private lenders, the highest I would see private lenders going to are about 85 and maybe 90%
Yeah,
loan to value.
yeah.
Now, if you have a situation where your appraisal comes in low and you have a minimal deposit, you're going to have a tough time closing if you don't have help from friends and family.
Yeah.
Because if that, so if you're going into this with a 5 or 10% down payment and you don't qualify either because the other thing is the insurers don't do pre-approval. So people should know that even when they're pre-approved, if that's an insured mortgage, meaning you have less than 20% down, that the insurer has never seen your application until you actually have a real purchase. And neither has the lender, neither has the bank, because they haven't seen the property. So they may have seen the story that the mortgage broker has told them, but they haven't seen documents. They haven't seen the property. So it's important that you have to start with, that you have a mortgage professional who is going to ask the right questions so that your pre-approval means something. That, it was amazing. There was a time when like nobody went in without a financing condition, and look at the world we're in now. I mean, if as a mortgage broker, if I tell somebody that they can't go infirm, they look at me like, what planet am I from? So people need to know that there are risks if they move forward, and what are those risks, and can those risks be mitigated? Like I say, you go in with a 5 or 10% down payment. If your application is sort of borderline and the insurer may or may not approve, you need to know going into it, what's the risk, and are you prepared to accept that risk? Because if you can't close, you will get sued. So Barry, in answer to your question, yes, A, B, C lenders, A being the first tier banks, B lenders, trust companies, credit unions, many lenders around who will accept borrowers with, so credit, harder time being able to prove income, and C lenders, private lenders. And if you don't qualify with an A and B and you're under the gun, you should definitely be looking at what a private lender can do. The only thing with a private lender is that if the rates are high, you may not be able to carry the mortgage long term. It may be sustained. You might get the money to close, but if your mortgage payments are double or more what you thought,
Yeah, but
you're
it could be short term. Here's the other thing.
right.
So we know the buyer, the best one to do, the best example here is the person who's bought that can't sell their existing home. What they do is they can take a temporary mortgage on their own existing home, use that cash to close the deal. That's, or collateralize between the two and get a blanket mortgage or collateral, whatever. So you can use your other property. Somebody asked a question about how I structured that vendor take back mortgage. I'll do it really quick. Number one, it was a 6-month mortgage. Number two, there were no payments for 6 months. It was a balloon. At the end, they owed X dollars on top. I think the yield came out to about 10 or 12%. There were no brokerage fees, so they saved a lot of money on that. And the only fees were the cost of a lawyer registering the mortgage. There was it was so they could pay it. Oh, that was the other thing. They could pay it off any time within 6 months, but they still had to pay the balloon payment at the end. Let's say I can't remember, I think it was $35,000, $40,000. So they borrow 35, but at the end they owe 38.
Mm-hmm.
No matter when they paid it off, they still had to pay out the 38. Now, just so you understand the function of interest and yield, the faster you pay off something, and if there's a bonus, your yield goes from 8% to be up to 9 or 10% because you've got the money back faster instead of out there. So there's the use of money. I mean, For anybody who's listening to this that's a realtor, really, you've got to absorb yourself into the mortgage market, because you've got to understand mortgages are a tool that you can use. There's bridge financing, there's interim finance, there's collateral, there's blankets, there's wraparounds. I mean, there's vendor takebacks. There's so many variables of mortgages that you can use to manipulate and structure and make deals happen, that a lot of deals, I look back at 2017, the bump like Bob talked about, when the market bumped, crashed a little bit. A lot of it could have been resolved by vendor takebacks. A lot of it could have, not all, not all. Now, here's something else that's happened. I do a lot of litigation work as an expert. I refuse to take on a client who is not a victim. I do not take out the perpetrators. I take the victims. I choose my cases. I refuse for years to deal with anybody who was a seller and didn't close. Recently, I've had sellers that didn't close because some of the agents involved have screwed them over. And it's quite fascinating. So it's not always that the buyers won't close. It's also the sellers won't close, not for being stubborn, not because of being greedy, but because they got screwed.
An interesting two comments here. I have a client who wanted to buy. Terry Wallman mentioned this in the chat. I have a couple of clients who wanted to buy a cottage. The vendor had a huge CRA lien and was a non-resident. The problem with non-resident is, first of all, he was going to say that he was a resident, but in fact, he was living in England and he was clearly a non-resident. And there was not enough money to both pay the CRA and hold back the 25% non-resident withholding tax. So what we did is we went to the second mortgagee and we said, hey guys, this was a trust company, are you in default? And they said yes, and we have issued a power of sale. The first mortgagee issued a power of sale. So we went to the second mortgagee and said, we'll buy the place from you under your power of sale. And by the time it went to the board of directors and their appraisers and their lawyers, they just dropped the ball. So they were gonna lose a lot of money. And the first mortgagee is now proceeding under power of sale. We got our deposit back. So one alternative, if the owner's underwater, is to go to the mortgagee and buy directly from them. Another issue we had was, I lost this one. I can't read my handwriting. Okay, well, I'll come back to it.
Come back to it. There's a question somebody sent me, which I think is a good one for you, Bob, and it's long, but I'm going to read at least part of it so you get the gist of it.
1 second.
Buyer's bank, TD, sends funds to his lawyer late night on date of closing, which is before a public holiday, meaning they were unable to tender funds to seller's lawyer on closing date. Seller's lawyer says next day that the sellers now refuse to close as the buyers are in breach of the deal. Buyer tries to offer to pay penalty for delay. TD has given no reason for delay. Seller's agent, who is seller's son and signed deal as POA, says that sellers were unable to find another property and were upset, so they sold low, believing they could get 50,000 more. Now they're trying to claim the deposit is forfeit and have listed the property for 60,000 more. Thoughts?
The law is time of the essence. There was a case that went to the Privy Council that's established the law in common law jurisdictions. If you're 10 minutes late, you're in default. And time of the essence. So in that case, the buyer, if they were late past 6 p.m. on the day of closing, they're in default. At that point, I would advise my buyers to use the threat of litigation, to go to a lawyer, put a caution on title, register notice of the agreement on title, and see if you can bully the other side into collapsing. When they realize that win or lose, they're going to have to pay their lawyers 25 or 50,000, which is not recoverable, they may wake up. But technically, If your deposit is late, if your mortgage funds are late, it's too bad. I had another situation where a client applied for a mortgage from TD, not mentioning the TD Bank by name. The client applied for a mortgage, a standard 75% mortgage, not 8 weeks before closing, a pre-construction in cottage country. Comes the day of closing, TD's not ready. They need another week. Client closed with his own money. He had cash in the bank. And then a week later, we closed the deal. We closed the mortgage. It was ugly. The TD Bank was horrible. The problem was the client was a high net worth client, and every time he said, I have rental income from this property, they wanted bank statements, they wanted tenant acknowledgements, they wanted copies of lease, and the bank was horrible. Again, not mentioning TD by name.
Okay.
Bob, you know what? You know what's very interesting? You just talked about institution. I think we have to look at the different levels here. If you are buying a property, and let's say it's an estate, and it's one of the trust companies involved, go try to negotiate with them like you could with a private party. You got the committees, the suits, people who don't understand real estate. I worked in a case, a situation where, as a realtor, with the public trustee, who I used to be able to, when in my early years, you could go downtown, sit down with a public trustee, hammer out a deal, and walk out the door. I spent 1 year to get that property from my client. And in 1 year, the costs, the amount of money that was eaten up out of the estate was unbelievable. And I negotiating on a power of sale or anything, they're not the same people they used to be. I mean, Terry Wallman's on here. His family had a trust company. You go down, you talk to the president or the vice president of the trust company back in the day. Try doing that today. You can't do it.
I remember what I was going to say. When a client buyer is short some money, I always ask, do you guys have an RRSP? And most of the time they don't, or there isn't enough money in it. But if there is enough money in the RRSP, I say, okay, let's look at the after-tax value. And if you collapse your RRSP, will that give you enough money to close? And in the odd case, it does, and it will. And there's some hesitancy. And the thing is, they say, well, I'm going to take a big tax hit. And my answer is, no, you're not. 40% of the money in your RSP doesn't belong to you. It belongs to the government. They're just lending it to you so you can get income from it until you're 65 or 70, whatever it is. But there's nothing wrong with collapsing an RSP to get out of an ugly deal if your buyer's a little short.
Well, I just want to mention as well that you can hold your mortgage in your RSP. It's supposed to be set up in
Different topic.
Well, I mean, I think, if you're having trouble closing and you have money sitting in your RSPs, besides collapsing the RSP, if you can get the mortgage, hold the mortgage yourself, although you're supposed to qualify for it. So,
and it has to be insured.
Right. So, but anyway.
Hold on, let's go backwards. You collapse your registered retirement and all other. If you get sued and you lose in court, you're gonna have to give up all that money anyways and cash in everything. Everything you own, every asset is a tax. Right,
RSP
Bob?
may be exempt if it's with a trust company or a life insurance company.
Life insurance, I believe. I think it's life insurance.
Barry, there's a question for you from Peter Mazukin. Can you clarify how the seller's agent screwed the sellers who wouldn't close? How could this happen? And more importantly, how can we better protect our seller clients?
It was first of all, ethnic client. I'm not gonna get into nationalities. Ethnic agent, ethnic clients, and they knew each other back in the old country. They knew each other. There was a history, and they trusted. The agent comes in, and I won't get into all the details. Late at night, they're trying to put their kid down. It was a big festival that had happened in their community. And the agent comes with an offer, and the house had just gone on the market. And he says, this is a great offer. You've got to take it. And he hammers out the deal that night. But the wife wakes up the next morning and goes, something doesn't smell right. We got all these cards here. Everybody came through in the first 24 hours. Why are we getting so many visits? And then why did he hammer this out? She phoned some of the agents, and the agents go, we had an offer. We were told you already sold the house last night. You go, what? We hadn't sold we found out now were 4 other agents ready to put in offers. This agent that did the deal came out late at night, did not tell them about. He told the other agents, we already got an offer in play. There's no more offers. We sold the house, which he hadn't yet. And in turn, there were better offers. And the agent did it to double end the deal. So we found this out. We have got all this type of stuff. Another one was the same thing. Ironically, the client is a lawyer, a corporate lawyer, who refused to close when she found out that the property was worth significantly more. She had nothing to do with real estate. She never follows the market. She's a corporate lawyer, deals with contracts, and the house was worth hundreds of thousands of dollars more than the agent that came in with an offer and was double ending the deal.
David, Stephen asked, what are the options for a buyer if the seller won't sell and the property is not unique? Which is an interesting question. I think it's a matter of making the buyer realize that it's going to cost money to fight. If it's not unique, get on with your life, buy something else, negotiate a return of the deposit, maybe some extra costs. But if they won't return the deposit, then register a caution on title. You can register a notice of agreement of purchase and sale that's indefinite, and you don't have to pay land transfer tax if it's just to protect the deposit. So if the seller won't sell and the place is not unique, just move on. It's not worth fighting, especially if the place is not unique.
Agreed.
I have a comment on the TD thing. First of all, I just want to say, I guess it depends who you're dealing with and what are the circumstances. But generally speaking, I've had good experience with TD. You know, people come to me and they need financing in a short period of time. I found them to be responsive and somewhat flexible. But I will say this, not only about TD, but all institutional lenders. They will generally have in their agreement, a mortgage contract, it'll say that all conditions must be met 10 business days prior to the closing. A lot of times, it takes more time than that. People don't understand the urgency, or the mortgage broker doesn't explain why it's important. And most of the time, the lender will accept documents as long as they're not a mess. You know, even the day of closing, if, you know, in a pinch, right? In a pinch. But just because you have that commitment has conditions in it, almost certainly. And you have to meet those conditions, according to the contract, 10 business days in advance. So TD may have an out in that case that was given, and you know, as to why they were late. Maybe they were still collecting documents, even though they issued the commitment 4 months earlier. Okay, there's a question here. It says, if deposit, somebody sent this to me, if deposit not received after 24 hours of acceptance, the deal is null and void. Does the seller need to wait to receive a mutual release before putting the house back on the market?
No.
Why would you give them a release?
Yeah, why would you give them a release? I would just put the place back on the market. I know some brokers take the position that that in circumstances like that, they need a release. The answer is no. Just put the place back on the market.
Bob, is it not, for a contract to be valid, is not a requirement to collect a deposit? I mean, to sort of consummate that. A house that I purchased, I was trying to get financing, and the lender said to me, well, did you make a deposit? And I said, no, not yet. It said in the contract that a deposit, but they never asked me for it. They said, go get your financing, and then we'll, you know, they trusted me to that I wanted the property and that I would proceed if I got the financing. And but one of the lenders that I approached said, you didn't make a deposit, so you don't have a binding agreement.
The answer is we go back a few hundred years for the law of contracts under seal. And on the AREA forms, a little black circle beside the signatures. And if it's a contract under seal, then the law is that it's binding with or without a deposit, because the seal is supposed to be the seal is supposed to be the consideration.
Yeah, you know, in the old days, when we were still doing offers by Etch-a-Sketch, by cuneiform, we carry seals. The real estate agents, we carried seals, and we put red seals on the offers.
And they tasted awful.
They did. Those seals, yeah.
There's a slide in the remaining minute. I prepared the slide, so I might as well show this, and I'll put everybody's contact information up again. If you have more questions, I would encourage you to contact myself or Bob or Barry directly. This is a case. What happens if you buy a property? You're pre-approved. You go out, you buy a property, let's say for $900,000, and then the appraisal comes in at $800,000. In this case, it's not a lot of sweat off the purchaser's back because they intended to buy conventionally, meaning they had 20% down. So what happens in this case, if the appraisal comes in low and they wanted to maintain their deposit, they could have the mortgage insured, because as most of you will know, on an $800,000 or $800,000 will be the appraised value. So it's based on the lower of. That's what the lender is going to finance. So you can finance with 5 to 10% down. And here's an example how you can keep your cash requirement by insuring the deal. And there's a multitude of lenders out there. Even A lenders vary from one to the next in terms of, some of them don't follow the stress test. So talk to a mortgage broker. Talk to me if you need assistance closing a deal or pre-qualifying it. Talk to Barry if you need his help. Barry deals a lot with people. Sometimes real estate agents refer deals to him because they're complicated, maybe hoarders. Barry, what are some of the other examples that people come to you?
Sometimes I'm ordered by the court to sell properties. Divorces are not always, a divorce is not always a husband and a wife, or today 2 partners. It could be business partners who can't get along. I have one right now where 3 guys went into a contract 20 years ago, and it said, this is the stupidest thing I've ever seen. The lawyer sets up their agreement to buy and sell real estate, and it says all decisions have to be unanimous. What the lawyer didn't say was, what happens if it's not unanimous? And there was no provision, so now they're in court. And I'm hoping to be the agent for that one. I'm 2 of the 3 of them are ready to accept me. I do a lot of complicated estates and hoarders and people that are just deals that are more complex than others. And I like it. I thrive on it. I want to say one thing in closing, though, if we're getting close to the closing here.
Yes.
I've been speaking to a lot of lawyers. I'm going to make a prediction. I'm going to stick my neck out here for 2022. I don't think you're going to see I think you're going to see more real estate litigation in the next year than we've seen in years. You have no idea how many people are going to be sued, and real estate agents are going to be. Now, ladies and gentlemen that are watching, you could be the best real estate agent of all, but because you touched the file, you're going to get named. So I get a file in the other day. They're going after the listing agent and the selling agent. I went through what the listing agent did, and I wrote in my report, this agent handled themselves in an exemplary, professional manner. There's no case against the listing agent. But what happened is they touched the file, and therefore they were named. And in my course, I teach how not to get sued. The thing I'm telling every agent is, make sure you have impeccable notes, diarize everything you're doing in real estate, and make sure that you keep them with scanners today. There's no excuse to throw out files and notes. There's none. Keep everything, because you never know when you're going to end up having to defend your actions.
Right. Thanks for that input. Bob, you've got the last word. Bob, Bob, again, real estate lawyer. He also handles wills and estates, corporate and commercial law. Closing thoughts, Bob.
I agree with Barry. I have one this week. I'm working on it right now. Please, to the agents, please be very, very careful. I don't know if everybody knows what a parcel of tied land is. It's when you have a freehold lot and it's tied to an undivided interest in the condominium roadways. That's called a parcel of tied land. I had a client who bought a place on a freehold offer, which said you buy lot 1, plan 1, plus an undivided interest in the roadways, but it didn't refer to the POTL, parcel of tied land. And so there was no reference in the agreement to the $320 a month cost of the common expenses for the roadways. And the buyer says, after I review the offer and tell them that it's on the wrong form, the buyer says, I'm not going to pay $320 a month. The agent did it on the wrong forms. I want a deal with no roadway costs. And guess who's going to get sued? So I said to the agent, my client is expecting to close. The agent said, oh, I've prepared an amendment. And I said, well, they're not going to sign the amendment because the buyer wants to be exempted from the roadway costs. So please be very, very careful. For agents, it only takes a few minutes to get the lawyer to review it. Please be very, very careful. So David, thank you very much. This has been wonderful. We've had over 100 people on throughout with almost no loss. It was wonderful.
Well, thanks very much.
Thank you for hosting this.
Thank you, Bob.
Thanks, David. It's
Thank you,
always a
Barry.
pleasure.
Thanks everybody for joining. Good to see you all. We look forward to hearing from you. So give us a shout if we can help. Have an amazing day, everybody. Take care.
Thank you.
Thank you.
Bye-bye.
Bye.
Thank you.
Bye.
Bye-bye.
Good to see old friends.